All right, what's up, everybody? Raul Shah here, CEO and janitor of DocShah Financial. I always make that joke because I'm the only employee, so I pretty much handle everything. But today we have a very interesting question. I've saved a lot of money. What should I do with it? And you'd be surprised at sort of a lot of people's inability to make a decision. It's great that you saved a lot of money, and I'll run through kind of what some of the basic options are. But first, what's the problem with just leaving all your money in cash? And the main one, as you probably guessed, is going to be inflation, because every year that you don't do something, you don't invest your money, you're going to lose. The CPI will report, 2 or 3% inflation over the last 10 years. In reality, it's a lot higher. This is a topic for a separate video, but the CPI will understate inflation through exclusions and substitutions and hedonics. So let's just assume, it's like 3 or 4%. It could even be higher, but we'll say 3 or 4%. If you have $100,000 in your bank account and you don't do anything, well, then after a year, it'll only be worth $96,000. And it'll still show $100,000, but the purchasing power will have been reduced. And if you don't do anything again the next year, then it's going to be 92,000 and some change. And so you're basically going to keep destroying your purchasing power the longer you don't invest. So that's one cost. But the other cost too is opportunity cost. You're forfeiting all the money you could have made if you had just made an investment, right? So opportunity costs, inflation costs, those are two really big things that are going to eat away if you just leave your money in cash over a long period of time. There's nothing wrong with, you want to keep it in there for a month or two or whatever. That's not a big deal. I wouldn't even worry about that. But longer periods of time, when you start measuring things in years, that's when you should probably start thinking about making an investment. So what can you invest in? Well, the three main things are going to be stocks, bonds, and mutual funds. There's so much outside of this. I mean, you have private placements and alternative investments. You have options and futures and all kinds of crazy things. But the main three are going to be your stocks, bonds, and your mutual funds. So when you buy a stock, it's just an ownership claim in a company. And if the company does well, the stock price will do well, assuming that you bought it at a fair price. The other thing is you can buy bonds, and bonds are it's a fancy word for contract. That's all a bond is. It's just a contract to be repaid in dollars at some point in the future. A mutual fund is a blend of both of those two. Usually there is a fund manager who will actually be picking certain investments, stocks and bonds, and they kind of put it in this basket, and then they sell you the basket, and that basket is the mutual fund itself. Within stocks, you also have index funds. So typically people will say, the market, right? They'll refer to anything as the market, and it's the S&P 500. That's what people are referring to when they say the market. So if you're buying an index fund, typically it's one that's going to track the S&P 500, but it might not. It could track all different kinds of indices, but usually it's the S&P 500. So the S&P 500 has 500 stocks, and an index fund that tracks the S&P 500 will own a piece of all 500 of those stocks. So you have a very diversified portfolio. Now, there are pros and cons to diversification, and again, that's probably a topic for a separate video. But when you have cash, you really do want to make an investment. Now, you don't want to rush into anything. I mean, you really have to think things through before making any investment. But the whole point is that, hey, I'm going to take money that I've saved. I could spend that money. I could go buy a Maserati. I could go buy whatever I feel like. But I'm gonna sacrifice today, and I'm gonna take that money and I'm gonna invest it in an asset, which is just something that something that you own that produces cash. So stock's an asset, a bond is an asset, a mutual fund is an asset, an index fund is an asset, real estate is an asset. So you buy something that ultimately will either throw off cash, like a stock could throw off dividends or a bond could throw off interest, or the asset itself appreciates in value. So let's just take an example with buying a stock. If I buy, one share of a stock ABCD, and the company pays a dividend, well, then I'll collect the dividends. Usually they're paid quarterly, and let's say the company does really well, so the stock price goes up. So I could then sell the stock price at a higher price than what I bought it for. So I could profit two ways. I could profit from the dividends, or I could profit from the stock price appreciating. Now, depending on your goals, your risk tolerance, and just what you really want out of life, that's going to determine how your portfolio is structured. And portfolio is just a fancy way of saying, where your investments are housed, right? And if you have a portfolio of stocks and you're young, that could make sense because you have a lot of time for these assets to grow, and it makes sense to take on a little bit more risk. And stocks usually carry more risk than other types of investments. Usually when people get older, they start to switch a little bit more towards bonds. And again, there's pros and cons to all of these sort of strategies, and there's no one size fits all. But in general, that is kind of how it works. But if you're young, it makes sense to buy individual stocks or index funds or maybe even some, mutual funds. But that's the whole point, is you want to invest your money. You don't want to just leave it sitting in the sidelines, because it's just going to get eroded from inflation, and you're missing out on a lot of potential gains. And it's not about the gains, right? It's never about making money. Right? It doesn't matter how much money you accumulate. It's what you can do with that money that matters. And it's the freedom that having more money can buy you. It's the vacations you can now take. It's the time you can spend with your family. It's that dream car you can purchase now. So that's the importance of making investments. And we do that for clients all the time at DocShah Financial. I mean, I've been investing for many, many years, and we construct all kinds of portfolios, and we can really kind of walk you through whatever investment options or what your goals are and all that kind of stuff, and come up with a really good plan. So I hope you guys enjoyed this video, and I'll catch you guys in the next one. This is my first video too, by the way, so it'll be interesting to see how the videos progress in terms of quality and stuff. But yeah, thanks for joining me, and I'll see you guys next time.